The stock market is a battlefield, and for investors in the cannabis sector, it is a particularly intense one. Few companies embody this struggle more than Tilray Brands. Incorporated, ticker symbol TLRY. Once a darling of the early cannabis boom, the stock has since come back to earth with a thud. Today, we're cutting through the noise to provide a detailed, unfiltered look at everything investors are curious about, and more importantly, everything they should know. Let's start with the basics. The current stock price of Tilray Brands sits around the $1.11 US mark, a price that has fluctuated wildly. This seemingly small number belies a massive billion-dollar enterprise. A quick look at the charts reveals a painful story for long-term holders. A negative 40.64% decrease over the past year, and a staggering negative 83.82% drop over the last 5 years. The company's market capitalization is approximately $1.22 billion. It's important to understand this isn't a small-cap experiment. It is a significant player in the global cannabis and consumer goods market. However, its financials paint a mixed picture. The company has a negative PE ratio, indicative of its current lack of profitability. Its return on equity is deeply negative, at negative 88.44%, further underscoring the company's struggle to generate returns from its equity base. Despite these challenges, Tilray's most recent fiscal year saw a respectable 26% increase in net revenue, reaching a record $788.9 million. This growth, however, was accompanied by a net loss of $222.4 million, a significant improvement from the prior year, but a loss nonetheless. One of the most crucial misperceptions about Tilray is that it is simply a cannabis company. That's a mistake. Tilray Brands has aggressively diversified its portfolio, and this is a key part of its strategy. The company is now a major player in cannabis, beverages, and wellness. To understand where Tilray is going, you have to understand what is moving it. 1. U.S. federal legalization and rescheduling. This is the elephant in the room. The possibility of the U.S. Drug Enforcement Administration, or DEA, rescheduling cannabis is the single most significant catalyst for the entire cannabis sector. While rescheduling is not full legalization, it would represent a massive step forward, potentially easing tax burdens and allowing for greater business opportunities. 2. Acquisitions and integration. Tilray's growth strategy is heavily reliant on mergers and acquisitions. The company is also integrating its recent beverage acquisitions. The success of this integration is paramount to its future profitability. 3. Project 420. This is Tilray's internal plan to integrate its craft beer businesses and streamline operations. This is a crucial internal metric that investors should track to gauge management's effectiveness. And 4. International expansion. While U.S. legalization gets all the headlines, Tilray's international presence is a key differentiator. The company's recent partnership with an Italian firm to expand cannabis access highlights its commitment to the European medical market. Beyond the fundamental business, savvy investors need to look at the stock's technical and ownership data. Tilray has a high short interest, with over 186 million shares shorted. This is a major factor in the stock's volatility. A high short interest creates the potential for a short squeeze, where a sudden positive catalyst forces short sellers to cover their positions, leading to a rapid surge in the stock price. This is a high-risk, high-reward dynamic that has attracted many speculative traders to TLRY. The company has 354 institutional owners who have filed forms, but the institutional ownership as a percentage of shares outstanding is relatively low. This indicates that the majority of the stock is held by retail investors. This can amplify price swings, as retail investors are often more reactive to news and market sentiment. Tilray's future is not guaranteed. The company faces significant headwinds, including profitability challenges and intense competition. However, the opportunities are equally compelling. A change in U.S. federal law would be a game changer. The company's strategic pivot to beverages and wellness is a smart move that could provide stability and a clear path to profitability, regardless of the cannabis market's future. And its international growth gives it a solid foundation. In conclusion, Tilray Brands is not a simple stock. It's a complex and high-risk, high-reward investment. For the apathetic observer, it's a volatile stock in a nascent industry. But for the serious investor, it's a chess match of regulatory changes, strategic acquisitions, and a race to profitability. The stock's current price reflects a challenging present, but its future hinges on a number of key catalysts. Approach with caution, but also with an understanding of the immense potential that still lies dormant in this company.